I want to get right over to our guest, Shana Sissel from Banríon Capital Management. She's the CEO and founder of that company. And Shana, you know, we have had real concerns about the macro, about the tariffs. That's what knocked the S&P 500 down to 5,500. But we're trading back up now to 5,750. Have we priced in a stagflationary economic growth scare?
Well, I think the market has certainly adjusted itself to the potential for stagflation. I don't know if it's fully priced in. I think some of the more positive economic news and the more positive market last week may have taken out some of that risk. But I think the risk is real, and I think the market should be adjusted for that. But as somebody who's a long-term investor and focuses on fundamentals, I see this more as a nice entry point. If you look through history, it's times like this where you make most of your money is when everything's kind of beaten up. And so right now I would be looking to buy on the opportunity to take advantage of a short-term dislocation for the longer-term win.
Shana, can I just challenge you on that and ask how much pain has there really been? We're only down some 7.7% from the high. Retail has continued to buy. David Kostin pointing out that foreigners have continued to buy. Do you need that type of capitulation from retail especially to be confident that we won't have more pain to come?
Well, like I said, I think that the market took out some of the risk of stagflation, and I think that it needs to be put back into the market. I actually am saying exactly what you're saying, which is that we had a 10% correction. That's a correction. It's not really suggesting that a lot of the over exuberance is taken out of the market. Yes, to your point, you need to have like the retail investor kind of scared out of the market before going back in. But that said, in some pockets of the market, you are seeing that. You mentioned Nvidia. I'm a huge Nvidia bull, and I have been for a while. I've been on this program before and talked about it. When you see a stock like Nvidia, whose long-term trends are quite positive, trading down so much, that to me is an opportunity to step in and buy while it's in an attractive valuation. I'm not looking to pick a bottom, but I am looking to buy stocks at a much more attractive valuation. And some of the names that we were all complaining about last year were too expensive, that valuations were inflated, have now come down and are much more like in line with what they should be, much more attractive on a valuation, much more at a discount than they were. So as an investor for the long term, I'm not worried about finding the absolute bottom, but I am looking to buy things at a valuation that makes sense. And many of the areas of the market, specifically some of the AI names, are there, and I would be a buyer on that.
I mean, as we always say, you can't get fired for buying Nvidia, Shana, but you could for buying Nike. The stock is down, what, 45% over the past 3 years. They're still firing executives. They're still trying to turn things around by focusing on sports, but also like influencer underwear. So why do you like the stock?
So I like this stock because, first off, I have a 9-year-old, and he is a Nike fan, and his friends are Nike fans. And I really believe that Nike will turn the ship around. They have already made some really positive changes in their senior executive leadership, and they are really thinking about, you know, how do I pivot to take advantage of changes in the consumer markets and the way things are sold to take advantage. If you think about what made Nike so famous to begin with, it was working with Michael Jordan and taking that risk. And this pivoting to the influencer market, I think, is a reflection of how consumers really find the new trends, where it's not on ads on TV, it's on ads on your Instagram feed. I'm always being influenced by the ads on my Instagram feed. I wish I wasn't. But taking that and being thoughtful and pivoting, I think Nike is a brand leader. It certainly hasn't lost its cachet from that standpoint. It's just a matter of making adjustments and pivoting their approach to be able to take advantage of how consumers get their ideas, their trends, and follow them. And that is actually in the influencer market, but it's also in the athlete market, and they're starting to turn that way again too.
Shana, unfortunately, I too am very easily swayed by online targeting. I think I am an advertiser's dream in that regard. But for these consumer stocks, as they try to right the ship, just how much more complicated is it with a period that it feels, again, we have it yet to show up in the hard data, but it feels like one of a consumer slowdown. Survey data has gotten worse. You have the airlines talking about people being less willing to spend on airline travel. Does it make the likes of a turnaround for Nike and others trying to do the same thing that much more difficult?
It does, but it doesn't make it impossible. And again, I'll go back to where I started, which is that when things are really negative is when you want to be buying these trends. When it looks bleak is when is typically the best time. It's also when you typically make your best returns. So when you see these stocks, which I believe are going to be long-term winners, trading at massive discounts on valuation, under a lot of pressure, in the midst of a rebuild and a refocus of the business model, that's an opportunity to buy. Now, it's not always going to work. Value traps are value traps for a reason. So you've got to look at things on their merits. But I think with consumer stocks, there are places to kind of pick. And I think Nike's one of them. But on the flip side, you got Target, which has done better recently, but still hasn't really figured out how to compete with its peers in that discounted retail space like Walmart and the like. And so that's a stock I'm not necessarily looking at. But like a Nike, it's not as if like Adidas or somebody else is just absolutely like beating them and people are going there in droves and they're losing. They have to get back into like the consumer's good graces, but it's not as if there's somebody else that's doing it so much better that they won't be able to remain in that number one spot. And at a discount, I would look at a stock like that, especially at a time where the consumer may be going and struggling and not purchasing as much, because that's going to allow me to take advantage when things turn around.
Strong argument, Shana. Thank you so much for making it here on Bloomberg. Shana Sissel there of Banríon Capital Management.